Prices are soaring, financial uncertainty is looming, and it's time to unravel the mysteries behind high inflation. In this challenging economic landscape, we need strategies to not just survive, but thrive. By understanding key concepts like inflation and learning from legendary investors like Warren Buffett, we can adapt our investment approaches to navigate these turbulent times. This video will explore the inflationary environment, Warren Buffett's timeless philosophy, and actionable tips to fortify your portfolio when prices spiral upwards. The journey to investment success amidst uncertainty starts now. What is inflation? Before we dive into smart investments, let's demystify the phenomenon of high inflation. You've probably noticed prices skyrocketing recently. That cup of coffee suddenly costs an extra $5, groceries are breaking the bank, and gas seems to hit new highs every day. This rapid increase in prices is inflation rearing its ugly head. At its core, inflation erodes the purchasing power of money over time. As more money circulates in the economy, it drives prices up. Rising production costs, supply chain disruptions, and global events like the war in Ukraine are key culprits as well. The impact of high inflation is far-reaching. Savings lose value, consumers reduce spending, businesses face uncertainty, and investors see portfolio growth stagnate. During periods of spiraling prices, traditional investing strategies may falter. That's why adopting Warren Buffett's proven philosophy and smart tips can anchor your portfolio during the inflation storm. Knowledge is power, so let's get inflation savvy. Warren Buffett's investment philosophy. Warren Buffett's investing success stems from a unique philosophy rooted in patience, discipline, and long-term fundamentals. Unlike short-term speculators, Buffett avoids flashy market trends. He focuses on undervalued companies with solid fundamentals and holds investments for the long haul. Buffett compares the market's daily ups and downs to the temperamental behavior of a moody teenager. While others stress over temporary price swings, he stays resolute in his convictions. This unwavering determination allows him to recognize opportunities and remain steady amidst the chaos. In times of uncertainty, we can learn from Buffett's calm and methodical approach. Tune out the market noise, focus on value, and let time do its work. Don't try to time the market perfectly. Success comes from the time you spend in the market. Investing strategies for high inflation. With inflation running wild, let's explore some investing strategies to tame the beast. One option is to load up on tangible assets like real estate, commodities, and precious metals. Their inherent value provides a shield against inflation. Next, target companies with robust pricing power, the ability to raise prices without losing customers. Think utilities, consumer staples, and energy stocks. Their products and services tend to have inelastic demand, buffering profits as costs rise. Reliable dividend payers are another anchor against inflation. The income stream helps offset declining purchasing power. Buffett swears by dividends, investing heavily in stalwarts like Coca-Cola. Finally, bonds and treasury inflation-protected securities tips offer stability. Their interest payments rise with inflation, protecting your fixed income portfolio. A diversified mix of these assets acts as an inflation life raft. Let's break them down in more detail now. The power of diversification. Diversification is protection against ignorance, preaches Buffett. When inflation brings more uncertainty, diversification smooths your ride. Allocating investments across various assets, sectors, and geographies minimizes exposure to any single risk. While certain parts of the market stumble, other areas like commodities and value stocks often thrive in inflationary times. Diversification allows you to capitalize on these shifting dynamics. It's like having a balanced team equipped to handle different challenges. A diversified portfolio almost acts like an insurance policy. Even if one or two investments falter, the other assets provide a buffer and balance things out. Rather than betting big on a single horse, spread your bets wisely. The magic of pricing power. Some companies possess special pricing power that serves as an inflation superpower. They can selectively raise prices to offset higher costs without hurting demand or customer retention. This ability provides a competitive edge over peers, protecting profit margins in their industry. Which sectors tend to boast this magic pricing power? Utilities, consumer staples, and energy stocks come to mind. Their products and services are necessities that customers continue to pay for despite price hikes. These defensive stocks act as a port in the inflation storm. Look for companies with strong brands, competitive advantages, and pricing flexibility. Pricing power is like armor against inflation, so target these resilient businesses. Reliable dividend stocks. Dividend stocks provide a steady income stream that acts as a buffer when inflation is high. In addition to price appreciation, shareholders earn regular dividend payments from company profits. As a bonus, dividends tend to rise over time too. Buffett views dividends as a key mechanism for wealth accumulation over the long run. His portfolio is full of dividend stalwarts like Coca-Cola, Apple, and American Express that have delivered decades of payout growth. When prices are volatile, dividends provide stability. The passive income can offset inflation and calm market nerves. Dividend reinvestment further turbocharges compounding. Bonds and inflation-protected securities. Inflation eats away at fixed income returns, but certain bonds can provide an inflation hedge. Treasury inflation-protected securities TIPS offer protection by adjusting principal value based on the Consumer Price Index. As inflation rises, so do interest payments on TIPS. Floating rate bonds are another option, with coupon payments periodically adjusting based on interest rate changes. This dynamic income aligns better with inflation. However, higher rates bring bond price declines. Managing duration and diversifying across bond types mitigates this risk. Blend TIPS, floating rate, high yield, and foreign bonds to build resilience. Inflation brings new challenges, but with the right mindset and strategies, we can overcome uncertainty. Warren Buffett's proven investment wisdom, focus on pricing power, dividends, and inflation hedges highlight the path forward. Building a diversified portfolio and aligning assets based on inflation outlook is key. Stay nimble, but don't abandon long-term investing principles. Patience and discipline still pay off. With the right preparation, inflation doesn't have to sink your portfolio. View it as an opportunity to separate temporary market noise from enduring fundamentals. This measured mindset will serve you well in turbulent times. The financial markets are ever evolving. Keep exploring new investment insights and strategies. With knowledge and adaptability as your compass, you can navigate any economic environment. The journey continues, my friend. What's been your biggest investment win during a period of high inflation? Share your story in the comments, and if you haven't already, please subscribe to stay updated on our latest investment advice.